Good morning. Good morning. Can I have your attention, please? Good morning, everyone. Thank you so much for joining the Spotlight session on leveraging pro-poor digital financial services for climate resilience. My name is Bimbika Sijapati Basnet, and I'm from the Asian Development Bank, and it's my pleasure to welcome you. So, I wanted a quick show of hands. How many of you work on the financial inclusion space? How many people do you think that is? And how many of you work on the climate resilience adaptation space? Okay. So there's a lot of demand for understanding how to bridge the gap between the two, and that's our underlying theme today. So thank you for that. I'm going to this session is basically going to consist of two spotlight presentations. We'll first hear from Isvari Sivalingam from the Southeast Asia Lead, Better Than Cash Alliance, and then from Benjamin Mendoza from the Catholic Relief Services. And then we'll have three set of discussions, and then we'll open the floor for Q&A. So hopefully, we can make this session as interactive as possible. Please feel free to raise your questions to either the panelists or to the presenters. But I'd also like to welcome you. Do you see paper on each of your desks? Yeah? So could you do me a favor? As you, how many of you are visual thinkers? Visual thinkers, like to write down things. I'm a big note taker. Yes, I'm glad there are quite a few. So as you go along, can you think of quick snippets that you really like, nice quotations? And can you also think about questions that you would like to raise to the audience? And if you don't get a time to do that during this session, we'll be sure that they are answered either in written form or some other means. We'll be creative, I promise. So without further ado, let me please welcome Ms. Isvari Sivalingam, Southeast Asia Lead for Better Than Cash Alliance, who's going to talk about the central theme of our session today, which is on how to build the synergies between financial inclusion, which is only some of you, and climate resilience. So over to you, please. Thank you.
Thank you very much. Very good morning to everyone. I'd first like to start by thanking our friends at ADB for bringing us all together and also putting this very important topic on the agenda this year at the CRPP Forum. This is something that's very close to our hearts at the Better Than Cash Alliance. We are a program of the United Nations. We're housed within UNDP. And we work with more than 80 members globally, both governments as well as members from the private sector and fellow international organizations that have really made the commitment to make the transition from cash to digital payments with the overarching goal of advancing financial inclusion and also attaining the Sustainable Development Goals, which is at the heart of what the UN does. I just wanted to say also that it's really our work with governments, particularly around digitizing social transfers, our work with some of our corporate members who work in agricultural value chains such as cocoa, coffee, and so forth, that have also brought to our focus and this fairly recent focus that we've put on climate action and the role of digital payments and digital financial inclusion on climate action. And there are a lot of lessons that we can learn from our work in digitizing social transfers as well as digitizing payments as well as financial services for highly climate vulnerable customer segments like smallholders. This led to this call to action that we launched, and I shouldn't say we launched because it was really launched by our members. It was championed by the government of the Philippines, alongside the governments of Ethiopia, Ghana, Bangladesh, Pakistan, also the V20 group and partners from WFP, Mercy Corps. And we really call out three key areas for action. And at the high level, I want to say that what this call to action really strives to do is to, number one, highlight where has there been progress made and where are there opportunities for us to leverage both digital channels as well as infrastructure to advance climate action, but also to recognize where we have a lot more work to do. So I think these 3 key actions really speak to that. Number 1, I want to focus on a little bit more just because it's central to the topic of our discussion today, which is how do we leverage digital payments, which we see as sort of the enabler or the entry product to broader financial inclusion, because everyone needs a formal transaction account to be then recognized by financial services and get offered additional products and a broader suite of products like insurance, credit, savings, and so forth. And then the second key word around digital public infrastructure. Digital payments is one of 3 components or pillars of DPI, as we like to call it. The other fundamental one is digital identity, which we all know is an enabler and a prerequisite to financial inclusion. And while we've seen a lot of progress in terms of access to IDs, that's still a huge gap in many jurisdictions across the world. And 1 in 5 women still say that lack of a ID is the main barrier to accessing financial services. The last component of DPI is data, also a very important piece when we talk about climate action specifically, because so much of what we do with financial services relies on other data systems, be it social registries, be it early warning systems, so that sit parallel to financial services, but not necessarily in the same realm. So there's a huge opportunity. I just wanted to also highlight that we are in a very different point in time today than we were 5 years ago when it comes to digital payments. Today we're talking about interoperability, which means that regardless of the type of account you hold, in many markets you can transact very easily with other individuals, with businesses. This is a fundamental game changer. We also have low-cost channels that enable digital payments like QR codes, and reducing the cost of access to financial services is really, we believe, going to be fundamental in expanding financial access, because that's what the financial, I think, inclusion community has been trying to do for the last decades. How do we bring the cost down so that we can really scale and ensure that everyone has access and is able to use digital payments, digital accounts? 2 and 3 really point to what we need to be putting a bit more focus on. I think while we recognize the positive, developments in many parts of the world, we still struggle with consistent, reliable digital connectivity. And this often overlaps where communities are also climate vulnerable. But the good news is that there are a lot of innovative solutions with low orbit, satellites, innovative offline technologies that also enable use of digital payments today. And last but not least, which I think is at the heart of the work of many people in the audience today, is how do we actually put communities and customer segments that are most impacted by climate change at the center of planning. And when it comes to financial services specifically, it's very important to involve and understand the resilience needs of these customer segments in designing the right sort of products that financial systems are able to offer. So coming to the central question, and I will like to illustrate this with a specific case study that we are all quite excited about. But I think as I spoke to a little bit, there are key ways that digital payments, digital financial, and digital in general, digitizing financial services in general, can contribute to climate action and solving some of these urgent challenges that we all face. The first one is really timeliness of the transfer and the efficiency and the transparency of the transfers. If you speak to humanitarian first responders, they'll tell you that the biggest challenge today is really the speed of getting relief to impacted populations, right? That's really the issue that we're trying to solve. And through new approaches that I will go a little deeper into later. This is an approach where you send transfers ahead of the climate event just because of our collective ability now to predict the trajectory of specific climate events. We are not only able to improve on some of these metrics around timeliness, but also expand financial inclusion for communities who are very often, who fall within the or underserved segments by setting up accounts. And we have this lead time to do this financial inclusion exercise. I spoke a little bit about, who are the segments. I think the other big segment that we really do need to focus on are smallholders. They are extremely vulnerable to climate change. And we see how, digitizing value chains, digitizing payments in value chains, then offers additional opportunities, offers risk mitigation opportunities for financial service providers to then extend additional products such as credit, which is, we all know there is a gap when it comes to smallholder access to credit, but also additional products like insurance that speak to addressing specific shocks, including climate-related shocks. And I think the last 2 points I've already covered. So I'll move on to the example that I wanted to speak to. And this is some sort of early results and impact from an anticipatory action pilot that is run by the UN. And these are some lessons from Bangladesh where we've seen much success and really positive results that I think help support the case for expansion of such initiatives in other markets. So UN CERF is a centrally managed program. It stands for the Central Emergency Response Fund. And these pilots have been rolled out now in some 9+ countries. And what anticipatory action, or AA, generally means is that, this methodology pre-establishes when, on what basis, so, on what conditions, what triggers, what intensity of the climate event will financing and ancillary actions be triggered, right? So that's the principle behind the anticipatory approach. And of course, this is being delivered by several UN agencies as well as supporting partners. So I know we have CRS here, and CRS works very closely with the UN in implementing this project, for example, in the Philippines. So, it does reach a significant amount of people. Some more than 300,000 people were targeted for the 2020 floods that happened in Bangladesh. I think a significant result, if we think about the earlier points made around timeliness of response and how do we actually achieve that, how do we crack that, 2 weeks before flood waters actually reach life-threatening levels, the vast majority of people were reached through multi-purpose transfers, which were largely done through mobile transfers. This is in addition to a number of other in-kind support that was also offered to cope with the floods. And I think, some of these numbers speak to itself. The metrics that we really want to measure our performance or ourselves on are things like timeliness, so that's been covered. The other one is, of course, cost. We do want to find more cost-effective ways of reaching end beneficiaries. And I think this figure is quite significant because compared to 2019 figures, just of the floods the year before in Bangladesh, the costs were pretty much halved in terms of the cost of person reached. And, this fundamentally means that you expand your budget to reach more people, expand your programming, which is something that I think is now top of mind for many of us, given the state of events globally and all the changes that are impacting the resources that we have to act as well. There was also, decreased loss in assets, animal mortality, lower indebtedness. I think that's key because we heard earlier as well how communities often resort to lending and in many cases, informal lending to manage these risks and to cope. And I mean, there's several sort of metrics that were done by independent evaluators that also interviewed the beneficiaries who expressed satisfaction, right? So 90% said that it reached to the right people, because this is often a big challenge, like not knowing where the money goes and ensuring that it's reaching the households that are impacted. And I think we also saw amongst the poorest households, women being supported, and benefiting more than men. So these are metrics that are quite important for us, and I think it offers also lessons for similar programs to be expanded elsewhere. So I don't have a lot of time left, but I just want to finally end off by saying, so what? We've launched this call to action. What are we doing now? And I think a big piece of work that we're trying to do, and where I'd like to invite everyone in the room to also join us, is how do we connect the dots better between national financial inclusion strategies and national climate finance strategies? I think within government, we recognize that there are different agencies that are driving these two efforts. And we think there is value in, sort of breaking the silos and connecting these conversations a bit more. Because in a lot of climate vulnerable jurisdictions, we do have national financial inclusion strategies in place. There are also adaptation strategies in place, such as the NAPs and NDCs. But when we reviewed the NAPs of 6 of our member countries, we saw that there's very little mention about the role of retail financial service providers, the role of financial institutions in actually addressing adaptation and resilience. And this is despite the fact that, you'll see sectors like agriculture, like social protection, called out in almost every NAP. It's there in every NAP. But, how do we actually get climate finance down to the community level, down to the household level? This is where we see there's a huge role for also including financial institutions. And I think the point to make is that because NAPs are a policy exercise, a policy process, often, managed by the Ministries of Environment, the Ministries of Finance, who are extremely powerful in their ability to also motivate fiscal tools, right, that can incentivize the private sector. So in many markets, we know of subsidized credit schemes. Could we move in the direction of these schemes also, demanding more of climate action for banks and financial institutions to benefit? So last point is just that we are having a series of conversations, and we're bringing together stakeholders at the national level in these 6 markets. We finished the one in Indonesia last year. We're looking forward to conversations in the Philippines and Colombia this year. So I would really like to end off by just saying, please join us. Join us and also commit to responsibly digitizing payments so that we can accelerate climate action. Thank you very much.
Well made, and the evidence base was very compelling. So thank you so much for sharing that. The theme again is about connecting the dots and this call for action. So I'm really pleased that we have a very diverse panel, and we'd like to next invite Ms. Benjamin Mendoza, Program Manager from Catholic Relief Services, to share a few words. Thank you. Over to you.
Hello. Magandang umaga. Good morning, everyone. My name is Benjamin Mendoza, from Catholic Relief Services, and I am based in the Philippines. CRS is the official humanitarian agency of the Catholic community in the United States, and we've been working in the communities for 81 years across 121 countries globally. So now let me introduce you to CRS flagship savings mechanism. It's called Savings and Internal Lending Communities. It is a structured, community-based, self-managed savings group. So although it is informal, members establish their own constitutions and bylaws. And they also elect officers to better guide their savings practices. So Silk members agreed to deposit a flexible amount of money into a pooled fund. And that fund becomes also a loan fund to the members in need. Yeah. And so at the end of the saving cycles, that's roughly around 8 to 12 months, the savings are divided to each member, including the profits that they gain to the loan services. So, as of 2024, CRS organized and mobilized more than 5 million Silk members in 63 countries globally. And see how much the group can save in just a year. Yes, it's $169 million. So imagine this are savings from the marginalized communities. And that amount can actually really save lives in cases of emergencies. Over the years, we enhanced our approach in savings. And one key innovation that we did is the implementation of Project RISE, or resilience investments to SMEs that empower women. So this project educated women on financial literacy, financial management, disaster resilience, and climate risk, while connecting them to financial services through the use of digital technologies. So, if we can just imagine, there's a modified livelihood microinsurance, there's a cash grant, so they put up e-wallet account, and there's a gamified learning materials, resiliency learning materials, all in one mobile application. So women now enjoyed learning while receiving this financial support at their own pace. Yeah. So as shown in the result, innovation in Silk presents an ideal model that can actually contribute to urban community resilience. Silk, or the savings and internal lending communities, it goes beyond savings. It actually creates a mechanism where vulnerable women engage to resilient livelihoods. It also fosters trust. It creates an engagement and cohesion between and among community members. And most importantly, it builds financial stability and financial strengthening. Integrating innovation such as the use of digital technology creates a bridge that links the marginalized community to better financial opportunities. And also, they can access financial and resilience learning materials, early warning information, and perhaps long-term adaptation practices. But I agree, it wasn't a one-time, big-time implementation. It wasn't an easy journey. So let me share some of tips that we gained during the implementation based on our experiences. So first, you need to choose a platform that can manage multiple developments. Number one is the language localization. It's not just about learning materials being available, but should be understandable by the marginalized community. It should also can manage several financial services, such as our example earlier. And it should also have feedback mechanism and back-end communication avenues for the community members. Second point is that you need to truly understand who your participants are. What are their interests? What are their capacities, social capacities and digital capacities, and how they're gonna respond to the issues that you wanted to address. Third bullet is that we need to check on available digital infrastructure at the community level. Yes, although internet connection and gadgets are available at the urban community, there are still limitations, and it is costly, actually, especially also in the Philippines. The 10-year implementation of Silk in the Philippines proven that it can be actually a core component of various community development projects. Now it is being integrated to the Philippine government through the Department of Social Welfare and Development institutional program called Pantawid Pamilyang Pilipino Program, or 4Ps. 4Ps is a conditional cash grant provided for the marginalized Filipino household community, while Silk offers a practical solution on financial management. So, in conclusion, savings are crucial for financial security, especially those who are highly exposed to climate risk. And a financially stable community is better equipped to cope with climate risk and recover more effectively. And with this in mind, we will continue to be determined and committed to improving Silk, or for enhancing the financial stability and resilience of the vulnerable community. I wish I had more time, but maraming salamat po. Thank you so much.
Thank you so much, and you gave such a wonderful example. You know, last session we discussed like how innovations don't necessarily have to be new things. Innovations can be things that are very important, like savings groups, and how it's morphed into, these fancy digital payments and then integrated into the government's conditional cash transfer program too. Thank you very much for that example. So next, I would like to invite our panelists to share a few words. And maybe I will start from Mrs. RJ Azucena, who is actually from the Department of Social Welfare and Development, to speak a few words about what was discussed, but also some thoughts about how the department is using digital payments for the Philippines' conditional cash transfer program, and how you're doing it not just individually, but using group-based approach. So over to you. Thank you.
Thank you so much for the presentation. Those were inspiring, really. When it comes to Pantawid, like Ma'am from SEC is telling us, for now, we have like 97% of the conditional cash transfer beneficiaries already have their transactional accounts. And what I'm going to tell you is that having the cash transfer in transactional accounts, it has a spillover effect, meaning in the local economy, when they're going to receive their grants, it's like everywhere they have they can buy something, they have stores, meaning it really empowers the community to also have their initial, businesses when it comes to the cash transfer. And another thing, it's very empowering for the beneficiaries. Really, like you can actually transact using your phones. Like I really have the decision making when it comes to my money. I can pay the utilities. I can buy using GCash, and also the financial services like GCredit is really helping the community when it comes to the financial services. But otherwise, aside from the spillover effect, the Pantawid Pamilya also has the module on financial literacy, meaning one of the conditionalities is really the attendance to the family development session of the beneficiaries to the financial literacy module, meaning last year we already rolled out meaning we have trainings to our community or the municipal link. We call them municipal link as the case management officer of our Pantawid beneficiaries, no? And then another thing is that we have a rise of digital banks available, and they have like increasing interest when you use it. Or maybe aside from the physical banks, the digital banks has more increasing interest if you use it. And we also have enhanced educational opportunities for our Pantawid Pamilya, linking them to other livelihood programs. For example, the DSWD has the Sustainable Livelihood Program. We have different tracks, meaning you can have the employment track and the micro-enterprise track. So our women, from Pantawid Pamilya beneficiaries, we're offering them another complementary program aside from the transfer that they have from the grants of conditional cash transfer. And then another thing, we have another program which is the Enhanced Partnership Against Hunger and Poverty program. This program is linking the community-based organization because in the Philippines we have a negotiated procurement. Negotiated Procurement Act, in which the community base can have opportunity to bid to our national programs like supplementary feeding program for farmers and fisher folks. So that's which we have a capacity building program for them. And then lastly, from the one that she's saying about the anticipatory action, we piloted actually the building, that's so long, but we call it Be Spared. Building capacities for the social protection during emergency and disaster program. We call it Be Spared. But really, timeliness is of essence. For example, the evaluation of the program, they have like different coping mechanism. So they have negative coping mechanisms such as selling their livestock. So in one of our program and taking on debts. But if you have a cash transfer, you can effectively use it in the local and use it to buy your essential needs before the disaster came. So that's one of the effect. And then we also have, what I like to point on is that it's not a standalone program, meaning all of the programs need complementation. So in different aspects, like a livelihood protection, the early warning system provided by LGUs, and one of the challenges is really the political system in the local government unit. So based from our experience, what we're doing is like we're really leveraging on our beneficiaries as voters. No? We really telling them, these are voters, you can support them through this and this during our planning sessions. I think that's all I can share for the Department of Social Welfare and Development in the Philippines. Thank you.
Thank you. Thank you so much. Can I maybe invite the speakers and the panelists to please sit on the stage so that everybody can see you? You know, when I think about like how to ensure that financial inclusion reaches the last mile, and those who are the most resilient to climate change, the image that always comes to my mind is Vanuatu. Also because I've lived there, but also because it's such an archipelago and the population is so sporadic and so spread across. So it's my honor to welcome Mr. Andrew John, who's going to help me think about this question, and hopefully his response will be useful to you as well. And he is the Financial Inclusion Analyst from the Reserve Bank of Vanuatu. So over to you, please.
A very good morning to all of us, and I also want to especially acknowledge the hardworking staff of ADB and also our colleagues from Thailand who have managed to organize a wonderful event for the 2 days event. Greetings from Vanuatu and also from the Reserve Bank of Vanuatu. For us at the Reserve Bank of Vanuatu, I've heard the previous speakers have been speaking. Coming from a regulator's background, for us is how do you balance innovation and regulations? So finding the right balance is the key. Like while we have a core mandate to keep financial stability within the country, we do not want to stop innovations within our individual markets. So finding the right balance would be my first response to such developments within the country. As the Reserve Bank of Vanuatu is also a member country, similar to the Bank of PNG, PSP from the Philippines. We are a member of the Alliance for Financial Inclusion, and the Alliance has really helped us a lot in addressing some of the issues around climate change and also the other themes that are discussed within the Alliance. For us, something that really has helped us a lot is our National Financial Inclusion Strategy. So within those strategy, we try as much as possible to include the innovation component of it, while also looking into the regulatory gaps that exist within our legislations and also within our regulations. So once we identify those gaps, then it will allow us to enable an environment where innovation can be, we can allow innovation to grow and also address what we, like key areas like, such as access to finance and usage, build up usage within our communities. For those of you who have never heard of Vanuatu, we are located in the South Pacific. We are close to Fiji. Have you guys watched rugby? Okay, so Fiji is one of the key rugby players, similar to our colleagues from PNG. They are one of the those that really like to play rugby. So within those areas, within those regions, for us, we are like similar to the Asian communities. We are prone to natural disasters such as typhoons, cyclones. But for us, it goes to an extra extent where we also face earthquakes and volcanic eruptions. So when it comes to climate change, for us, it's something that it really touches the lives of our people. So in order for us to address the needs of our people, we will have to find solutions, especially digital solutions, that enable a quick response when there's a natural disaster. Just recently, one of the humanitarians and NGOs, they piloted unblock cash transfer that allowed the disbursements of funds to the affected communities within 1 week. So the humanitarian, the NGO collected the funds. One good thing about us is that our national ID, it's mandatory for every citizen within the country. There must be a national ID allocated to an individual person. So it allowed us to use that national ID to roll out. So the key, do you want to reach that last mile for our communities is to have a national ID or a database that can be used in rolling out such innovative solutions. Also, like what we heard earlier during our presentations, there must be commitment from the government. Commitment in the government in such a way like we've seen our other colleagues from the Fiji, they have started to use mobile accounts to disperse funds. Also, they're trying to use other innovative approaches, especially to disperse funds when there's a natural disaster or to roll out other services within the country. I don't want to talk too much, but the main key message that I want to put here is, as a regulator, we know that our key core is to look after financial stability, But we also have to be mindful that we must balance both regulations and also innovations within the market. Thank you so much.
That was a really nice segue. Thank you very much. So may I please invite my colleague, Amit Tandulkar, who's a senior digital financial specialist from ADB, to share a few reflections on the presentation so far and also discuss some of the great work that ADB is doing. Over to you.
Thanks. Thanks very much. I think when I came here today morning, I had a big list of points which I wanted to cover, and as the sessions happened, one by one got ticked off. So let me improvise over here. And to the fellow panelists, I think very important points covered today. The only thing which I would like to recap from the morning sessions is the first thing was the climate event. When you're looking at this, any climate event which is happening, it's not only, it's not only a humanitarian event, it basically leads into financial crisis. And when you have a financial crisis combined with a climate catastrophe, what are we looking at? So if you put yourself in that place, you will see that I want money right now, okay? I want to spend the money, okay? And I want security. I want my tomorrow to be secured, my family's tomorrow to be secured. Now, if you want to do this at scale and sustainably at scale, you have no option but to focus on digital. But the problem is, in a lot of countries, what we see is this awareness comes only after an event has happened. And that is where the entire focus has to be. Are we ready to, wait for an event to happen, or do we need to get digitally ready? We are talking about DPI over here. We are talking about, core social security measures, money going across to the right people at the right time. Everything is fine. But have we thought about it upfront? And that's what policymakers have to decide. When we are designing these solutions, another point which I found was we have a very, very agenda-based view over here. So like policymakers would like to get it right money to the right people at the right time. The fintech or the technology service providers, they want to do it fast. They want solutions to be developed fast. And you see that there is this entire disconnection over there. Because when you are developing a solution, something which I saw it on the board today also, that you need to focus on 360 degrees. You can't have a fintech coming up with a smart idea and just going out in the market, and that's how, when we go to India, we see that public sector banks being flooded with fintech players and say that I have a very smart idea to solve a social security problem, and we'll focus on one scheme. That's not how solutions get designed. That's not how policy also should get designed. So how do all these people come together? But there should be some agility and speed which needs to come into play. We have been talking since yesterday. I'm hearing terms like, it will take 3 to 4 years to draft a policy, another 4-5 years to see the impact. Will a fintech's interest be aligned to that? A fintech is today, or rather yesterday. And you are talking about 3 years and 4 years and 5 years. So as a group, we need to decide that while we expect a digital solution to be implemented in an agile way, are we agile in terms of something which happens before that? Do we want to make it so perfect that we are ready to sacrifice that crucial amount of time and shouldn't happen, but if an event happens during that period of our consultations and our memos and our focus group discussions, which keep on happening for 3 years, 4 years, 5 years, how is it that we are going to address the situation if something happens? So digital will enable, and the best thing for you is to start now, and start with small if possible. If something is available and solves a problem, 70%, 75%, don't wait for the big thing to happen, which may take years to come in. The reason why I'm saying this is because you will realize that as it has happened in banking, in social sector also, the data is going to be crucial. all the solutions that you're going to focus using digital and technology are data hungry. If there is no data, there is no predictive capabilities which are going to happen on any of these solutions. So if you want to lend, so for example, look at any of these solutions. If we are not going to get data in from day one, okay, we won't be able to analyze it 3-4 years down the line in terms of how it's happened. And for that, we require something which needs to be designed from a 360-degree perspective. A lot of times what happens is we have designed a solution saying, and we have been hearing this from morning, right, that digital payments have happened. I have come across a lot of cases where digital payments are something which are happening and money is going across instantly to a citizen's account. But what happens before that? Imagine during COVID, you can send me the money directly into my account, which is great. But before that, I had to wait for a month because I had to come to a local government office and fill up a manual application form. So the application process is not digitized, but only the payment is digitized. Right? What happens in terms of, are there enough avenues? You know, Prerna today morning raised this. Are there enough avenues for us to have a spend ecosystem created? Is there an acceptance network of a card or a QR code in the market through which if I'm getting money, I'm able to spend it directly without having the trouble of going to an agent outlet or to a ATM to actually withdraw. So somebody needs to think about this end to end, right? And it's on us. There's nobody else outside to do this. Hopefully forums like this raise that awareness. And policymakers, fintech providers, I don't see any technology or solution providers over here. I think hopefully we should get them across next time as a participant, because they are also one key stakeholders because they need to invest for the longer term. So thank you very much for giving the opportunity, and I look forward to some questions. Yeah.
Thank you so much for these thought-provoking reflections. I hope you've taken notes of your questions. Yeah? Can I invite somebody to raise a question, please? Yes, please. If you could just introduce yourself and mention who the question is, and if you could use the mic.
Okay, so a really fascinating presentation on digital financial inclusion. I am Dr. Fariha Margan, and I'm a financial inclusion and social protection researcher. So again, very fascinating to see how voluntary saving clubs can be so powerful in terms of the figures and stats that you have shown. And really, I have some burning questions because this is something we have been trying to do in Pakistan, those step by step. And just wanted to know that you mentioned that these voluntary saving groups of saving plus lending within the group, they are coming with digital technologies like modified livelihood insurance, gamification, and digital wallets. So just really wanted to know that what was the literacy, the digital and financial literacy level of the participants, because in Pakistan, when we leverage it on social protection beneficiaries, 70% of them are illiterate. I just want to draw some nexus. And further, you have mentioned that 86% of them utilized for their businesses and 100% with secure livelihood. So was there a labor market readiness model, like some hand-holding or capacity building in terms of business generation, how to do business? Or it was just that this intervention was leveraged and it was all of these were adapted even without the back-end literacy? The context behind this is in Pakistan is that in 2019, we already did a scoping of leveraging saving plus lending plus digital wallet self-help group with the support of Bill and Melinda Gates. It came out to be very positive for the social protection beneficiaries. But the only missing link was the financial literacy. And now we are having nationwide financial literacy camps for these women under social safety nets. They go under classroom model. So just building on what the distinguished speakers mentioned, that we cannot wait for ages for this to happen. Can we have it all in one go? Or by chance, was anywhere South Asia part of this intervention? So like 2-3 questions.
Oh
at a
my
time.
goodness, that is quite a lot. And I think the two of you, need to sit for lunch and have a conversation, hopefully also shared with the group. But could we have a few questions? We are running behind, so if you wanted to go for your lunch, that's fine. Those of you who are committed to staying on, please do. Over to you, and then the ma'am next. Yeah. And if you could just introduce yourself, though we, of course, heard from you, but and also mention the question, and keep the question.
Okay, thanks so much. My name's Christy Lowe. I'm here because I'm working on with ADB on a project on adaptive social protection, but with another hat, I also am a research associate with ODI, working on social protection and a lot on digitalization of social protection. And I think there's so much exciting potential here, clearly, for digital financial services, digital payments, but in the kind of challenges that we definitely need to navigate, I often find that how data is used that's being collected through digital payments is often, the upside of that is often emphasized, like how we'll have all this data that we can use for evidence-based policy making and everything. But there's also, from the perspective of vulnerable households or, small self-employed workers and so on, in the research that we've done with ODI, the concerns about formalization and the tax implications of suddenly being brought in, made visible in financial systems are really very significant, and I think they're often overlooked. So I think, I would like to hear a little bit more. You were mentioning regulations, but I had the impression you were talking more about regulations of kind of financial service products, but actually connecting the financial inclusion policies with formalization and tax policies from the perspective of informal workers who are obviously in a very precarious economic position. We have seen cases of those workers who suddenly started using digital payments actually being hit with tax bills that they weren't expecting, which doesn't seem like it should be happening. It seems like there should be possible to have policy coherence, but I think the reality is it's often not happening. And just relatedly, the data protection, informed consent for signing up to use digital payments, it is very difficult for a household to be truly free in that decision. If it's the only way they're going to access a payment in anticipation of an earthquake or a cyclone, they're not going to be able to say, no, I'm actually concerned about how this data is being passed on within government systems. So, thank you.
Those are good reflections, ma'am, please. And then maybe I will invite each of you to think about the questions and respond in maybe just a couple of sentences, and we can wrap up. And please, this session is all about connecting the dots, so please invite people who raise the questions to you for lunch or meet them for tea and elaborate on your responses. And please do share with all of us too. Thank you.
Hi, my name is Joy, and I have limited knowledge on financial inclusion. My question is not addressed to anyone in particular. Among the most vulnerable to the impacts of poverty and climate change are the elderly and the indigenous peoples. They also have low financial inclusion. Are there good stories or initiatives specifically targeting them for digital financial inclusion?
It's a good question. So can I invite all of, as your closing remarks, if you can respond to snippets of those very sort of profound questions, that would be excellent. Oh, we have one more. Okay, let's give the floor to one more question.
My name is Kamsan. I'm from Cambodia. I think we have quite a similar experience with the CIS about the saving group at the community level. I want to learn the experience how it's operate. In our case, I'm not involved directly, but I heard the saving group in our case we set up at the community level. Let's say we have 20 members. They have the bank account as a group at the commercial bank, but daily operation is manually. So how to connect the manual operation day to day to the bank? So you have a app or any digital tool that fully digitalized or fully automatic to avoid the risk, because according to our experience, there are a lot of risks at the community level. When we say during a banking day, normally, according to the rule, every month they have to do a banking day, what they call banking day. The community come to a meeting with the team leader, with the cashier, to collect interest rate or to collect the principal.
Yeah.
Sometimes the team leader or the cashier, they have to go together to the bank, but sometimes they miss you. They took that money away. This is the risk we face. And so it's difficult to recover from the mismanagement of the fund. So what is your experience how to digitalize, fully automatic, fully digitalize from community to the bank?
Thank you very much. Thank you very much. That was a really great sort of real-life example. So let me give that challenge to our speakers in your closing remarks, if you can give snippets of responses to these profound questions, and invite all of you to please share your questions and reflections. Unfortunately, we didn't have time for a very in-depth Q&A, but hopefully that is one way that we can keep the conversation alive. So please do share your questions and reflections. So over to our speakers. Yeah. Let's start.
Thank you for the questions and also for the comments that have been raised. My final remarks would be, yes, we as policymakers, we must have our people at the end of every policy that we develop. There'll be instances where we will have to look at all the legislations, regulations in some sort to look after to take care of the risks that are associated. But as policymakers, our core, the thing that it should be at the back of our mind is our people. What should be the impact that we want to leave behind for the next generation? Thank you.
Thank you so much for the question. The Silk or Savings Internal Lending Communities, the 5 million population of Silk composed of actually 85% were women. And 40% of that population are from the senior citizens group. So these are women basically or just stayed at home and take care of the family. So financial literacy, if you are going to improve on digitalization, you are going to need to build on financial literacy plus digital literacy, and that was not an easy task. It takes time. It takes social preparation as well, because it's not just putting up e-wallet accounts. You need to start from the top, from the scratch, establishing email accounts, keeping mobile phones, mobile number, and that will take a lot of time. And based on the result, actually, we are still at the 27% financial literacy in terms of the result of the pilot test. That's for 500 women participants. It's a pilot test, so we are still learning from it and developing it. But the microinsurance plus the cash grant, it's already embedded in the program. It is designed to put as that, and then we learned from the reaction and the lessons learned that we got from the beneficiaries. And I'm not saying that we are already 100% digital. We are still at the middle, blended approach, because these are marginalized, vulnerable women. They have traditional learning, traditional knowledge on doing financial management. And we cannot, we also need to consider those traditional knowledge and manual doing things. No? And currently, based on the Philippines context, most of the marginalized women still prefer manual. So again, I would like to link it to increasing investing to financial literacy and digital literacy as well, both of those important aspects.
Thank you. Yeah, I'm going to respond to the questions that focused on really consumer protection as I see it. So some of the risks around data privacy and protection, to what extent do end customers have the agency to really act on it? And this is something that we recognize as an issue and is very much central to our framework around delivering digital payments and digital financial services in a responsible manner. And at the heart of this is really trust. So I think there were also questions on digital financial literacy and education. Our view is, as a standalone, the data and the verdict is still out as to how effective these can be. We're also advocating for the right design of products. So this is really understanding what customers need, because this is fundamentally linked to how much value they see in the product and ultimately continued use of that product. And on the other side is addressing the risks. So totally agree that, we just had a conversation with regulators from ASEAN last week, and we talked a lot about consent and how really consent is dead, because nobody reads the T's and C's when we download an app. So there really needs to be more of a shared responsibility also from the providers to simplify the existing protections offered inherently in these financial service provider products and services, so that newly onboarding customers, specifically customers that have little experience with formal financial providers, are able to understand what they're actually buying into. So these are, it's definitely work in progress, but I think the risks are understood, and from a regulatory policy perspective, there are several efforts to address this.
So let me take a chance to address your question first, and then I will come to you. I have an answer for you, but we may do it at lunch. But so wherever you have, you asked a question in terms of why will MSMEs come into the formal fold in the moment they are digitized, the moment they come into have a registration number, they are levied taxes. An MSME is a smart person, right? That's why they are in business and not salaried. So first of all, you need to address this most important question: what is in it for them? Okay, as long as, if I'm an MSME, as long as I see the benefits outweigh the cost, I will be in it. We have seen that, and we have cases in Bangladesh where we had launched women-specific programs to bring the informal MSMEs to the formal mode. There are cases in India wherein, in remote parts of, in regional India rather, wherein MSMEs who were under the self-help group wanted to become individual by getting into the formal mode. The reason why they went for that is they knew that they would come under the tax bracket. But having a number, and then obviously the financial institutions having data on them, ensured that they could grow their business multifold as compared to that tax obligation, which could be countered in various ways. A lot of financial institutions in Bangladesh and in India, where I have seen them, they have also offered smart tax advisory services to them. So it's a proposition which gets offered along with, the formalization. So it's not something which, is again, as I said, 360 degrees, focus on everything. Otherwise, you will not see people moving towards the formal fold. To address your question on elderly people, ADB did a pension transformation project in Uzbekistan, where we wanted, it was disbursed in cash to a lot of the senior citizens, and they did not want to move on the card. The reason why they were not moving on to formal channels was because there was a 1% charge the moment they were withdrawing on any ATM cards. So we worked across with the government over there, and we ensured that anybody who moves to digital mode gets a 1% extra pension amount. Okay, so you need to work on a case-to-case basis to find pointed solutions to address your issue. Again, it's not one size fits all. but there are things which are available. And just to cover you, sorry for that 1 minute extra, but you need to look at cases in Bangladesh, in India, maybe in Pakistan, wherein you have the digital solutions. You won't have this fraud cases for self-help group or community-led payment the moment you use digital. A lot of times, we say that before the agent moves out, the person, the account holder should get an SMS saying the money has been credited in the account. So if that is possible, okay, then the entire thing about somebody committing a fraud or running away with the money doesn't arise. So there are more than enough solutions available. Happy to connect with you separately. Thanks.
What I would like to point it is to have an appropriate delivery mode. No, for example, for your question, we are providing the social pension for the Philippines, and we ask them what is the delivery mode that they want, and that they want it to be delivered in their homes, or they want to pick it up, because a lot of them have been victims of fraud. Like digital, they really cannot keep up with the digital, like us. And they said that their eyes are swelling already. They don't know how to do it. They will ask their immediate families, but some of them are also, using the money that they have in the pension. So those are the risks that they already asked. That's why they really wanted us to deliver it to their homes. Meaning that is safer way for them. So what we did is we really we have flexible delivery mode system in whatever aspect of their digital capability was. So that's it. And for indigenous people, we're also doing that. Meaning we're crossing several rivers just to deliver the cash transfer to those who need it. And then I think what is really good is that we really have to ask them what kind of delivery system is appropriate according to their risk and vulnerabilities. That's all.
Thank you. And that was an amazing end to this discussion. You really have to ask them who are them, and ensuring that whatever, products and solutions, whether it's policy, whether it's, anticipatory or absorptive or whatever type of products, actually put people and different types of people, and including those at the last mile at the center. I think that is the theme of our discussion, and thank you for the speakers for really sort of honing in on that question. And I invite you to please speak with the speakers, and please don't forget your questions and reflections before you leave the table. Please. Thank you very much.